Greetings, everybody. This is Jeff Scott, and this is my weekend review for March 11th, 2018. Today's title is a happy anniversary celebration, or Bulls celebrate a happy anniversary on Friday, March 9th. For those who do not know what I'm talking about, and those who've been trading for a while know that the sell-off of 2007 and 2008 came to an end in the beginning of March, and some people, including Mark Haynes from CNBC, called the bottom on March 9th. As you could see, you'd have to trust me a little bit on this. The market had a number of bingos come in late February and early March, and then notice the series of green eurekas. All right, one of the reasons we're not seeing eurekas in the market right now is we haven't been pulled back. And if we start seeing a lot of eurekas, considering the run-up we've had, that's probably a sign of exuberance. And you need a big pullback to start seeing a lot of eurekas, not little 5% pullbacks. The other thing that came in the middle of March of 2009 was that large blue bar, which is the kahuna. So, on March 9th, 2009, 8 years ago from Friday, we had an all clear. Did we have an all clear again this Friday? Disclaimer, as always, this is for educational purposes only. I am a physician, not a broker. Only license that I have that could impact on you is an MD. I'm not licensed by the SEC or any other entity that might help you pick stocks, buy stocks, or anything like that. So therefore, anything I say should be considered education and not investment advice. And I'm independent. I work with a number of programs. Yes, I do have the ability to call and ask some of them to add indicators for me, and I get that because, hey, I help them out. And this started as free training for new users of HGSI. Somebody did ask me about charting over the week. I didn't have time to answer you, but I'm going to show you during this video how to add things like squeeze and mobo to a chart. All right, trading involves risks. You and you alone are solely responsible. When I do an education program, and there'll be comments about that in about 5 minutes, I call my education Be Your Own Guru. I learned from a lot of smart people, many of which are depicted on this chart. I started as a follower of CanSlim, as brought to us by William O'Neill. Sorry about that. Improved by Morales and Katcher. Taken to the computer by HGSI software under the guiding influence of Ian Woodward and ultimately Ron Brown. Those are great tools for helping me digest the market, slice, dice, and do things whether during or after hours, online or not online. Then, how do you make the trade? Well, I learned a lot over the years from George Lea in the lower left-hand corner, and then position size money management from Van Tharp. I was an okay trader. I made money more times than I lost money, but I never performed the way I perform now until I started following closely John Person. Of course, I know nobody else has this story. I bought his indicators in his packages, and they sat on my shelf without any associated education for a long time. And then what did happen to me is I moved to Florida when I thought I retired, failed retirement because I was bored. And one day I realized that John's office was just across the intercoastal from my condo. And I went to John's office, and I started going into his office frequently to the point where I set up a trading desk with 2 monitors in his office, and we would talk about the markets all day. What I learned from John was not just what stocks to buy, but when to buy them, how many to buy them. Is it stocks? Is it options? And although some people who trade stocks may shy away from some of the traders and educators that seem to be very future mediated or motivated, John's a stock guy, and he's a trend follower, I would say, is fair to say that. He's a swing trader. He has his own unique ways of doing things. Because he's an educator, he day trades, he futures, but I think most of the money he makes, or the big money he makes, is on a little bit longer term trades and trading stocks. Highly recommend, whether it's his books, his indicators, but whatever you got to get the education. What I need on my desert isle, besides a cell phone to talk to John, is probably, and my high-speed internet is a trading platform. I use the 3 listed there. I have others too, which sometimes I just use for their data feeds. And I'll be the first to note that Genesis is optional unless you're a futures trader. HGSI is my best tool for analytics, as is EdgeRater, which supports it. I do seasonality, especially things like my Netflix gift that I give every year to everybody for Christmas, and the different websites. Speaking of websites, I have no monetary remuneration in any relationship with highgrowthstock.com, except I love their platform. So, stop hitting that button. Notice it says free 30-day trial. That means if you sign up, they don't even ask you for a credit card. If you sign up, you need to email me and I'll send you some goodies to help get you started from an education perspective. It is a very small user interface, but it's very powerful. It's kind of like my wife, 5'2", 100 pounds, but she can pack a punch. And then investing strategies, you'll have a lot of different folks have given a lot of their time, but mostly look for my name and Ron Brown as two folks that almost weekly are putting updates on how to use the software and how to make money. Ron and I use the same program to come to similar stocks. However, I go through more traditional Ian methodology and some of the canceled things that I've adapted. And Ron is heavy into volume spread analysis, different strokes for different folks. Stock patterns are cyclical. I feel so much like a broken record, and I guess the older I get, I'm thinking this is how all bull markets go. As you go through a phase where it's just easy to make money, you throw things at everything, they go up, you think you're smart. You get little pullbacks, you lose 3 times more than the market loses, and you think the end is near, and then eventually you give up, you take your money off during one of those pullbacks, and the market goes to new highs. What does that mean? We've been going through periods of time where we get a run, it looks like we're rolling over, and then intervention occurs from Washington or wherever, and we get another run up higher. We just had that higher run up. This one kind of feels to me like it's got some legs to it. You know, last week I said the market's going higher. It went higher. I think it goes higher from here. Therefore, I got decidedly more bullish when I started going longer stocks and calls. I put cover calls in yellow because I hate it when I go from cautious to bullish, because now I got these calls that are $2 out of the money and I get called away on some of my positions. Now, of course, we're going into the option expiration week, so I'll be careful on what I do to chase after those. So I've got some of my big winners that I may have to buy back the short calls. But hey, I only have to buy them back because my long position went higher and higher. A lot of different trades you could take, including some bull put spreads, which will just generate some income at nominal risk. But you have to realize on a bull put spread you might be risking $10 and making 2, but if 95% of the time you're going to win, odds are you're making $2 on that trade. So I do the same thing every weekend. I spend a lot of time on the market because that's what's going to determine if I make money this week, not how great of a stock picker I am or you are. And I do the same analysis daily. I start with my sector review. In blue, if you can see them, are some of the major sectors. Then I have the main components of those sectors. Green means they were up and red means they were down. Show me a sector that looks horrible. Well, currency futures, but we're not talking about them today. And grains. Okay, enough. Eliminate grains and currency futures and whatever this is, and some of the finance, the treasury bonds. So forget about those. I don't usually trade them. I give them a sense of what the market's doing. But we had a very broad-based rally. Of course, we were up nearly or over 400 points. Now, I like to click out of my PowerPoint and just pull up my Thinkorswim. So first thing is, I have just, I think I make the mistake of telling folks how I do. Part of it is validation of why you might want to listen to how I trade and what works for me. Part of it is I listen all day long to people pumping and dumping. So trading HGSI, I started the year with $2.5 million in my account. I bought a boat which was $600. there's my profits to date, about 1.5 million on a base of 2.5 million. That's somewhere over 50%, close to 60%. And I am not trading one stock in a big position. I am trading a lot of stocks. And I'm a fairly active trader, but I have a full-time job. I make most of my trading decisions on Sunday. During this video, I do some small amount of work during the week, mostly updating and looking at my charts to make sure I don't have to change a trade I've made. Most of the trades I take, I put in conditional buy orders. And, you know, I want to have a life. As I said, I have a full-time job, and I don't just have a basic job. I have a killer job. I run a business, and I'm one of the leaders of a business, small, no, not so small, and I have a bunch of employees. So, I mean, we have in the U.S. about 1,400 plus employees. So I do this while having a life. That's the point, and I think that's important. So if I look at the major market indices, just to get a sense, these are daily charts. You notice the low is on the left-hand side of the chart on the E-minis. So we've been in an uptrend. The high was January 29th. The low was February 9th, I believe. February 6th, 7th, 8th. Monday would have been February 9th. And we had another pullback here as well. Here's the February 9th one. So you got the February 6th. Here's the February 9th low. And we'll talk about that low and what's been working off the bottom. Big up day on Friday, and that little green arrow, in case you haven't been, or blue arrow, in case you haven't been here before, is a John Person buy signal. That's a free PPS buy signal. Came in on Thursday, a free signal on Thinkorswim. I use 17 in green, 50 in yellow, or blue if it's a white chart, in the 200-day moving average or 200 period on all my charts. So, you know, I look at the E-mini, and if this was a stock, I'd be going long. A new buy signal breaking above the 50-day moving average in a long-term uptrend. This is one of my favorite pullbacks to support and a breakout. This pullback more than you'd like on a stock down to the 200, but this looks very bullish. Can change on a dime, though. All it takes is Trump doing something silly. The NASDAQ, you notice the white balloon is all the way to the right, which means it closed or traded to its all-time high, and the high on this board as well on Friday. So NASDAQ at a new high, clearly leading the market. Remember, the NQs are the NASDAQ 100, so it's dominated by the Amazons of the world. Clearly a laggard, but a laggard that's also in a buyable point, breaking above the 50 with a new PPS buy signal, is the YMs, the Dow futures. The Russell futures actually have been weak, and they're probably the second strongest this week, not quite to new high territory, but moving up kind of like the NASDAQ futures and look strong. And unlike the E-minis, which are still in the middle of the pattern, getting closer to the highs. Now, if the markets are strong, then the VIX better be coming down. And the VIX closed down here at 15.7. Now, I did comment last time that it almost looks as if the VIX is in a higher trading range, and that probably reflects the higher volatility of the market. Maybe a couple more days like we just had. We've got a new sell signal came in on the VIX, and maybe we come back down to the chop between 10 and 12. The dollar, a strong dollar is probably good for some people, but not necessarily great for my market, and the dollar continues to struggle to get above the downtrending 50-day moving average. Now, we can look at the weeklies, and I think I'll flip it to the weeklies for a second and see if there's anything I want to comment about. You can notice, and I guess the big thing I wanted to show you would be the VIX and the, well, first of all, 50 weeklies, E-minis, NQs, TFs, and YMs and the IWM are all in beautiful uptrends with new buy signals almost throughout. The VIX is, as you'd expect, to be falling, and it is. It's sitting right here on support. And I did want to show you that because this has been weekly resistance going back over a year. Sometimes when resistance turns to support and vice versa, they can actually work. And so we're sitting right on support. That's one thing I'll be watching. And then the dollar, does it look like it's put in the bottom? I don't know that, but it looks like the downward momentum, at least on the weekly chart, has abated. And then I like to put it all together and look at three rows: daily, weekly, and monthly. And then I have the E-mini, the NQ, the YM, the TF, the NYSE, and the YM. Start with the monthly. Everything's in a nice long-term uptrend. On the weekly, chop, but everything is in a buy signal right now. And on the daily, we've gone into buy signal. So a very bullish appearing market. Now, have we gone too far? Are we overbought? Do I need to be prepared for a pullback? Well, first thing I'll tell you is when the market does this and you have two groups that were losers on the week, you have everything else is in black. You have the S&P 500 that was up 3.54% on the week. I like to make sure that I am performing as well or better, and then take a look at where growth falls. Growth was a very strong for the week. The IBD 50 was up 5.56. The IBD 85, which is their weekend review in IBD, was up 5%. I look at my holdings, I was up a little bit over 5% on the things I owned. If I looked at raw, my filtered buys were up 4.43, and somewhere should be my overall buys. We're up 5.15%, 34 to 5. These are real. These are what I showed you last week. I'm not making things up. I will tell you that these don't happen like this all the time. I'm happy if I'm up 1% and the market's up 0.5%. I just want to outperform the market, and I want to make sure that I'm in sync with growth, because that's where my abilities are and my trading style is. Now, I will point out my shorting candidates were up 5%. All of my shorting candidates went up. Of course they went up. You don't short a super strong bull. I take these so I get a sense of what the market's rolling over, and I do take shorts, but not when the market is as strong as it was last week. So I always have a couple so I can see and get a sense of when shorts are working. So a very powerful week indeed. Now, those who've been around a long time know that as an HGSI user and follower of Ian Woodward, I am a fan of ERG. ERG is simple. ERG is a combination of 0 to 99 ranking of EPS rank, relative strength rank, and group ranking. And I use ERG to understand whether growth is in fuego or not, or in favor or not. I get this little pattern by running EdgeRater. I use a snapshot of the HGSI database done the day or the day before I started the analysis, and I stop it at whatever stop date I want. I get 6 specific graphs here. Now, this light gray line is the number of stocks at each ERG. I cut them off, usually for somewhere around 40 or 50, and usually around 250, because there's not enough stocks there to be meaningful. And then I look at, am I in an uptrend or downtrend? Forget the tail and the head. Clearly, ERG is supporting it with the highest return on the year, where there's a number of stocks that matter, would be ERGs in the 210 to 220 range. That's good, because I know that I make more money with my style trading when growth is working. I look at EPS rank, and clearly the higher earnings per share rank outperformed. This is the decile of ranking, and this is performance. Relative strength on January 1st has outperformed. Groups come and go, and therefore the group rank's not interesting. Now, boxes, I only look at boxes off of a low. And if I look at AD letter rank, this always amuses me where we still have stocks that were underperforming into the fourth quarter that led the way. Those distributing still had the best return. So still some junk off the bottom. Now, I can shorten this, and there were two dates that I thought represented intermediate term bottoms. We had one on 2/9, which meant Monday 2/12 would have been the day I would have bought. We had one on 3 last weekend, would have been, 3/2 on Friday, 3/4 was Sunday, 3/5 would have been Monday. And then I run the same analysis off the bottom, and notice the angle of descent. Notice that you had 5% returns in 1 week and 10% returns in some stocks in less than a month. Notice that relative strength still matters, so does earnings per share rank. Now all of a sudden better accumulation mattered as well. And you got all the boxes are performing. Box 0 would be all the stocks outside the boxes. And yeah, most of the boxes outperform that, but I think it's too short of a period of time to say much. So, impressive ERG performance off bounces from recent lows. Growth may be back. Let's look at what drove the markets. Well, interest rates on both the 10-year here where I'm pointing, this is the S&P, and the 30-year S&P were up. Interestingly, the markets were higher. Rising rates are good for banks, especially regionals and insurers. They're starting to show outperformance. AD lines, hard to see here because they're both going straight up. AD lines are leading the markets higher. Easier to see here where white is the NYSE, and you can see all the major indices and the key here. These include the diamonds, the Qs, the spiders, the IWN, and the transports head up. The only thing going down are bonds. Breadth, percent of stocks above the 200-day and the 40-day SMA. I look for stocks, I look for this to get at extremes. When it gets to extremes, and extremes have been breaking over this line, although absolute we're not there today, is when the market seems to turn down. We're back here today on both of them, so not overbought. A little bit closer to overbought, but very fast acting is my 3-month new high, new low ratio, and you could see we're getting up near reversal. Now, I've said that before, and it always reverses when it maxes out both top and bottom. It could still go up, and sometimes the market goes higher without this thing moving up much higher. But it is getting to the point where I'll be watching it daily. My daily McClellan, oscillator is going up in sync with the price, and look at how high the oscillator is compared to this. So, is that a bullish convergence that's occurring? Is this market going to be propelled higher? Time will tell. Buckets. These are a series of tests that I apply to the market to set my expectations, bull or bear, all in or not. Notice how many stocks are trading above the upper Bollinger Band, 20%, and 79% of the stocks in the S&P 1500 are trading above the midline. This is starting to get heated, but in a bull market, it can get a whole lot more heated, so it does not mean an immediate reversal. It'll probably get to 30 or 40 midweek before it turns around. With the bull market occurring, you can see in green the number of new highs on the NASDAQ and the NYSE are going up, and the number of new lows aren't there, which means no Hindies. If you look at market tone, we have greens across. We're looking at this third column, which is the Woody indicator. We had a number of kahunas on Friday, triggering us to across the marketplace green, strong buy signals, and I guess with the bandwidth here, starting to contract, perhaps some of that extreme volatility which we were experiencing has come out of the market, which would be a good thing. And from a sector perspective, you saw a number of sectors are now green as well. So clearly market improved a lot. Now I have 3 indexes that I put together, or Ian put together one of them, which I track on a daily basis to get a sense of how the market is doing. The first one are the Canaries. These are the big boys in the marketplace. I'm going to have to change Priceline because it's got a new name, Booking or something like that. Notice the lower left, upper right, at new highs. Weekly bongo's gone green. Canaries are leading this market higher, and they look to go higher. This is an index from almost a year ago. Stocks that were at leading the market, they churned and went sideways with an upward bias, and they are about to break out again. And then I put together melt-up leaders, and if you remember, this is right a week or so before the market rolled over, to sort of give me a sense when I needed to get out of the market, and they did their job rolling over almost immediately and preceding the market going down. But look at how they're sitting here. Mobo breakout from a squeeze right underneath the PSAR dot. They look like they're ready to go higher as well. Market feels like it's going higher. That can certainly change overnight. I'll mention Gary Cohn leaving, but who would have thought the market would go higher despite him leaving? Know your news and earnings. And some of the news are surprises like steel and aluminum tariff announcements. Looks like a lot less this week. We'll always have some housing starts and industrial production. We have some employment on Thursday. Quadruple witching is probably the story. I mentioned earnings expiration. Looking through, it's not a lot of Fed head speakers this week, which is good. So maybe the news will be quiet and the market can do what it's going to do. Still lots of earnings left. I'm going to be watching AVGO. I do not have a position right now. It spiked after hours on Friday with rumors of an IBM acquisition. They've been trying to buy Qualcomm, and I've made money on it in the past. It's not a cheap stock, but that's one that I'm going to be watching. Market thoughts. NASDAQ lead the market higher while others followed in this order of strength. Russell better than E-minis, better than Dow. Friday was a perfect storm of Goldilocks of government data, strong employment, no inflation. North Korea sending an offer to meet with Trump and potentially de-escalate their nuclear program. Market digested the Cohn departure. Well, if you were watching after hours, it didn't look so hot, but it recovered with the opening of the market. And Trump's and tariffs on steel and aluminum, like many of Trump's scare tactics, had a lot less bite than bark. It left out Canada and Mexico, appear to be a bargaining chip with NAFTA and the EU, etc. Plus, we've got Peyton Place in the White House. We got porn stars. We got reduction of security clearance for first family members. We've got dismissals related to white lies and then the ongoing Russian probes. And yet the market continues to climb a wall of worry in that regard. Had a huge move, appear poised to take out recent all-time highs. Starts to make me wonder, is this going to be the anticipated and often loved run-up before the sell in May? Now, I will say that selling in May hasn't worked a lot lately. Now, I made most of my money last year in the first and the fourth quarters, but I still made money in the middle of the year. And then look for small stocks to continue to outperform in this time of the year. All right, here's the live meeting notices. Let's start on the right. George Lea is holding a seminar April 7th, April 9th. George and I have different trading styles. George is maybe a little shorter term trader. He tries to be opportunistic and take high reward, high probability trades. I'm more of a swing trader, although I know George does both. We end up picking the same stocks. We manage them differently. We'll be doing a joint program, and I think Wojtek will be talking about TC2000, of which I've got some indicators for there that I will show people. There's very limited seating left. As of yesterday, there were somewhere between 2 and 4 seats left. It's $400 per person. It'll be at a private residence in Costa Mesa, California. And then if you're interested, contact Greg Mills at that email for any further questions. Now, I will be speaking, and if it's like past events, I'll be speaking 10% of the program, but that's okay. I like listening to George anyways. So I'm going to hold a one-day meeting in Orange County if there is interest. This will be a one-day seminar. It'll be at a John Wayne Airport Hotel. The title will Become Your Own Guru, and I'll train how I've blended the best of HGSI, Ian, and some of my favorite other influences to become a successful trader. It'll run from 8 to 5 p.m. Typical topics will be HGSI philosophy, using HGSI to trade top-down, my favorite trade setups, options for leverage, stops, and money management. Breakfast and lunch will be provided. I don't do these to make money. I do these to help people, but I don't like to lose money either. So if I get 5 paid attendees, and I need to have commitments almost immediately, then I will hold the meeting. If I have over 10 paid attendees, I will drop the cost from $500 to $400. If you're the first 5 to 10 and you pay $500 and we end up getting more than 10 folks, I'll give you a $100 bill at the meeting in a rebate. If you are a paid attendee of the George Lea Seminar, and once I confirm that with Greg, then you will get the same rebate whether or not we have 10 people or not. So those that are attending the George Lea Seminar will only pay $400. I will not be live streaming. Even setting up a meeting remotely is daunting to me. I actually do work hard in my day job. You must email me at hgsidoc@gmail.com by end of day Friday if interested. I will make a go or no-go decision at that time. If I do not have 5 firm commitments, then we will not have a meeting. A firm commitment will be a payment via PayPal or equivalent, which I will promptly refund if the meeting does not go on. And if you are one of the folks that do that upfront registration and then the meeting gets canceled next weekend because there's not enough interest, then I'll give you a nice gift for your interest, which will be a copy of my last program, which will be, I'll give you at the same time I give you back your money. Tonight's agenda: introductory comments, review from top-down perspective, and then if time allows, a bottoms-up review. Onto the charts. So we are, no surprise, in about 32 minutes in already. That's how it goes, folks. I do this, I talk too much, but I really think the market matters more than anything else. So I like, speaking of the market, I like to go into into TradeStation, and this is part of my nightly review. I go into markets, and let me add one here. For those that are TradeStation folks, version 10 seems to be working well, and with update 10. So I now hopefully will be using the new version of TradeStation, which is way cooler, but I had some performance issues and some error issues. E-minis. This is indicative of why you could be bullish of this market. Let me just check what this is. Make sure this is on the blue local. They still got a few things to fix, but I look at the E-minis. I look at 6 things. Number 1, am I in a person buy signal or a sell signal? I can see that in daily, weekly, and monthly. I'm in a buy signal in all 3. Woohoo! Number 2, am I green, which is a all clear, go long or hold, but don't short? Or am I in a red, which is bad, short or hold, don't go long? I am green and blue. That's bullish. Where am I within my envelope? I don't live usually for a long time below or above the envelope. I'm right in the middle to the upper side. That's good. Are there any divergence dots, which are these red dots here on the weekly? You can see them on the daily. Here's some on the daily. No, that's good. Where am I at on my high jump? I'm at 65%. That's good. My weekly bongo is still red. It'll turn green this week, I think, if we're up. Now, knowing what goes into the bongo, that's a small negative. I would say I'm bullish based upon this chart. I then usually run through this on each of them. I'm only going to do, they're all going to be strong. The NASDAQ looks great. Notice it does have a MACD divergence. It's at 88%. As I said earlier, it's leading. The Russell, also in a buy signal, getting close to the upper envelope. Buy signal weekly, still the weekly bond goes green, 86%. If you don't believe the high jump, every time it gets up here, which is about 100, the same thing happens. It comes back down. It may take a few days. YM, also a new buy signal, a little longer term when weekly is a sell. So the YM, as I already mentioned, is the weakest. I can find the dollar here somewhere. And the dollar is in a buy signal here. These are the green dots of MACD divergence, and you can see positive divergence. It can take a long time before it impacts on the signal. We're still in a weekly and a monthly sell, and that means if I look at metals, I might expect them to be weak with the dollar in a buy signal, and the metals are going sideways on the gold and sideways on, I think this is silver. All right, then I could do that same analysis for my sectors, but I'm not going to do that in the essence of time. Then I open up HGSI. And I go to the major Woodward Brown user groups, hit warehouse. It'll open it up next to me, and since it's from I'm going to have to potentially size it. Not too bad. I'm going to go to number 1, which is Major Markets Plus, and I'm going to switch it to what's called a top-down view, T1. And it's going to rank things. When I see mid caps and NASDAQ and small caps and Russell up at the top, bonds, volatility, utilities, commodities, and dollar, gold, and gas on the bottom, I know I made money because I'm a small to medium-sized stock buyer. So let's just quickly run through these. I'm going to try and do this quick because I'm not sure my comments will be any different. I use the same charts every week. Kept calling for a pullback to the 50. I got it. Looks like it's breaking out again. This is a kahuna on the S&P. They happen, and usually the market goes up after I see them, especially if it comes off of support. That's the S&P 500. The Dow Jones Industrial Average, about to do the same thing, closed above the 500, the 50-day moving average. The NASDAQ already breaking out to new highs. And then the Russell 2000 is using the IWM. Not quite as strong as the NASDAQ. Does have a weekly bongo come in on this, but it had its kahuna, broke above the 50, and looks like it's going higher. Now, this is to the person with the question of how to add mobo and squeeze. If I want to add mobo and squeeze, I go to Edit Current View. I do a new window. Actually, let me do something first. I'm going to go to Create View. I'm going to duplicate this one. And now I'm going to edit it. I'm going to go to the View, and I'm going to add squeeze and mobo to it. Okay, that doesn't do it, by the way. That's a start. Now, Edit Window. So first I got to add a new window, and let's add a window called the squeeze, SQWEEZE. All right, and I want to put my squeeze underneath the high jump. So I have to go and find the squeeze here. And I usually just go to all indicators. I think it's a Bollinger Band squeeze. Let's see. Guess I can type in squeeze. All right, I know it's in here somewhere. Let's look for it again. I hope it's not a... Been so long since I looked for it. And actually, it's going to give me a chance to show you what I always do when I can't find something. All right, I can't find it. What does that mean? It means I'm probably doing something wrong. So I'm going to cancel out of that. And I'm going to do, and this is, I do this all the time. I'm going to go to something where I know the squeeze is there. And now I'm going to open up Edit. Oh, I think I know why. I think I got to make my own. I'm going to hit Edit here, and what do I do for squeeze? Visual filter backtest. So I have to find filter of a squeeze. Ah, I know how to do that. So now I saw what I did here. So now I'm going to cancel out. So if you ever want to start a new slide, a new chart, just go look at what you did in the past. So back here, make sure I'm doing the right one, not the wrong, perfect. Window, and I'm going to go to Visual Filter Backtest. So you're going to get more for your money than you bargained for here today, folks. So where is that going to be? I need to do a new, I guess I got to add my window back. New window, squeeze. Hope if I paid attention to spell squeeze today. Visual filter backtest. Okay. I want to go back. I'll just go back 4 years is enough. For filter, I'm going to go to find my names and see if I can find a squeeze. I should have paid more attention to where it was. Fitzpatrick squeeze breakouts. All right, maybe it's not under my name. Is it going to be under? All right, hold on a second. Okay, I figure out where it's at. Under my name, under Visual Backtest Filter, find squeeze. Hit OK. Change the color to the color you want it to be. Okay. I want it to be under the high jump, so I'm going to have to highlight the window name, go down, get it so it's under high jump, and when I hit OK, I should be on the squeeze, and there's a squeeze on the chart. Now, adding the mobo breakout is a little bit more complicated. I'm going to go, again, new window, and we're going to call it mobo, M-O-B-O. All right, I'm going to have to add the indicator twice, one for up and one for down. It is a visual filter backtest. I want up to be a green. Let's do it for 4 years. I'm going to have to apply a filter to it, and let's go look in Jeffrey Scott, visual backtest filters, Scott breakout, mobo breakout, hit OK, and hit OK. And then we're going to have to add another one, add indicator, visual filter backtest, make this one red, red is down, and go to 4 years, or whatever else you want, use this filter, same thing, go to Scott, Jeffrey Scott, visual filter backtest, mobo breakout, breakdown, hit OK. Hit OK. Now we want these to be right below the squeeze. At least that's where I like them. You can put them wherever you want. I'm going to hit OK, and guess what we now have? All right, so I've added mobile breakouts and squeeze. Now let me. All right, so at 43 minutes, I'll have to put that in my note, how to make the mobile breakout filter. Apologize to those that didn't really want to see that, but I try and respond to folks' questions. All right, so now I'm bullish on the market. Where do I want to put my money? I'll go to industry groups. Now I've got 174 groups. There's a high correlation between these and things like investors.com, although they're different sources. And I'm going to go to 2-day force up, and I see 90 out of 174 have momentum to the upside. Woo-hee! That means the market's probably strong. And how many to the downside? 1, courier services. So only thing that was weak momentum-wise over the last 2 days, and you could see why. And if I do a right-click, quick add from web, I don't want to add from web. I want to, hold on a second. More info from Webb. Hit FinViz. Bad earnings probably. It's a beautiful thing. Goes right. Management change and probably BAT plunged 11% on earnings. All right. So we know that over the last 2 days, 90 out of 170 stocks were up, or groups were up momentum-wise. One was down. What about over a 5-day look-back period? 88 versus 9. So that tells me that even though it was super strong on Friday, it's been strong for a lot longer. And again, why my portfolio is geared towards the bullish side. It always helps to be facing the right direction. Problem is it can change overnight. Now, these are the top 30 of the 90 groups by momentum. I use a 2-day force. Now, diversified banks, life insurance, property and casualty insurance, and then the regional banks are all in the top 30. That's because interest rates are higher. Now, I've been playing around with some different ways of scanning, and this one is taking away some of the impact of volume. I'm not sure it's the right thing yet. So that's what the scaled is. It's looking at, instead of force being today's price minus yesterday's price times volume, it's price minus price times yesterday's volume over its 50-day moving average of volume to try and get, to really reward stocks that don't just have high absolute volume, but whose volume today was much higher than normal. So what I like to do is I like to look at it this way. I like to right-click, change index groups, and then I'll look at the first couple, and then I'll show you how I actually do play with this. Let me change it to my webinar view. So what do I see? I see NVIDIA's in a beautiful uptrend. It's right below the PSAR dot, had a mobo breakout from the squeeze. Everything's green up above. Great earnings per share growth. This is on my buy list. I'd buy it if it breaks out again based upon its growth rate, its multiple. It doesn't look overbought. It looks like it's setting up for another leg up. I'd rather buy it down here, but it's on my buy watch list if it doesn't get away from me too much. Intel, talking about buying Broadcom, will probably help this stock a lot. It's not at the high jump. It's pretty extended. I don't love the earnings per share growth. Broadcom, except for the fact it's going to gap open tomorrow, this would have been one setting up for a buy. Sitting on the 50 in a squeeze, mobo breakout, and a kahuna. I got to come up with a name for that buy because that's my favorite buy. That's a Scott buy signal. Scott 1 buy. Earnings per share growth, still greater than its multiple, pays a dividend. So there's a lot of news risk here. Qualcomm acquisition and potentially being acquired by Intel. I wish I didn't know that news because I'd be going out and buying it on Monday. Microchip, it's already broken out and gone. Texas Instrument, I would put this on my pullback waiting for a signal. I'd like to see some momentum come here. It did have a pocket pivot. It's not in a squeeze. I get bigger moves out of squeezes, but that one looks interesting. Now, I could also have gone back here and gone to my scaled and look at some things that will come up to the top, and I get a little bit different. IPG Photonics, I don't understand what these guys do, but it's at an interesting buy point. I probably wouldn't take it here. I would wait till it took out the PSAR dot, and I'd like to see a kahuna, but that looks like a low-risk entry point on IPG Photonics. Coherent is one that got hammered, and look at the setup here. You got 3 pocket pivots in a row. You got some kahunas. You kind of got a well-defined risk, although it still could be 6-8% pullback, and group strength is strong. Its earnings rate is falling, which is bothersome. I also don't like what it did after earnings last time. Earnings are not to May. Coherent might be something, and it's on my buy list, to be honest. And it's similar. Universal Display. Both of them are display components, also got hammered. And then there's Broadcom. So I usually go through the top 10 groups. Exploration and production. These have not been great performers, but some may be at decent areas of buying. I look at Devon, and let's just go to a weekly chart. It's made higher lows. Kind of has a high close doji on the weekly chart here. Looks like it might be done going down. It had some good news on Friday, but you're not buying growth here. You're buying stocks that have been beaten up and fallen down a lot. Whiting Petroleum looks a little bit better. It's broke above the 200, retested the 50. Again, great earnings per share growth. A turnaround story, have been losing money on quarter after quarter. Hess, similar pattern. I liked ConocoPhillips last week. I still like it. I probably like it more if it got above the 50, but I've got a squeeze, pocket pivot, a kahuna, and a dividend yield of 2.1%. Range Resources, also bottom fishing, but broke above the 50. I might also switch to my other way of looking and see what comes up to the top. And you notice I bring different stocks up when I mitigate high baseline volume. CNOOC, Stone Energy. This has been the big guy, Diamondback Energy, sitting right on the 50. If I saw Kahuna come in here, I might chase this one around. These stocks are not cheap with PEs in the low 20s. All right, so exploration production, not that exciting. Go back to the regular scaling. Biotech. And there were some big moves in biotech last week. Amgen, I think they moved because Regeneron and Sanofi didn't differentiate their drug enough to take away share. It's kind of been in a sideways pattern. It pays a 2.8% dividend, doesn't have much growth. I don't find it that exciting. Coherus. Coherus is a biosimilar company. They've taken some major hits in the past because their drugs got turned down by the FDA. The FDA wants to approve biosimilars, and here's a cheap biotech stock. They've got a nice portfolio of biosimilars. Kahuna, Mobo breakout from a squeeze, weekly bongo is green. I can look at this stock and I could say I can buy it, put my stop probably midway down the bar, maybe at the 50. I might wait till it gets above the 200, but Coherus will be sitting on my buy list because I think it's got a chance of moving. Here's a beautiful pattern, not in a squeeze, but Alexion with a pocket pivot, a Mobo breakout, a pocket pivot and a Kahuna, breaking above the 200. It's been in a long-term downtrend, doesn't have great earnings per share growth. This one used to be a darling. All right, so that is potential. Celgene has been in a wreck. CRISPR is a way of editing genes. I don't like how it ended the day. That kind of looks like a shooting star. If it closes or opens below that, it would be a stock to short, not a stock to buy. How do I deal with this? I'm in this industry. I've got some non-disclosures. I'm not allowed to talk about companies, some of them, or tell you why I like them or don't. So I buy LABU when I'm bullish. And when I'm bearish, I buy LABD. Obviously, LABU has been working better. This is a 3x long ETF. And these things are powerful. And this is one that I own today. I'm short at 110. So obviously, this is what I said with the market strength. I'm going to get these things called away. I don't care. I don't own the stock. I own $85 calls. So I'll take 85 to 110, which is a $25. And I think my net payment, sorry for going back and forth, was $7. I'll take 25 for an investment of $7 any day of the week. So I like biotech, but I probably am buying mostly ETFs. Semiconductor manufacturers. some smart people in Twitter and stuff were saying Applied Materials. I've been in it for a while. We'll look at Lam Research. Hard for me to get excited about a $200 stock. I can't buy that many shares. You probably can't either. It might be a great option play. Earnings are already out. Look at the earnings per share growth. Maybe I should be thinking that I should be buying this and buying options. So we'll see how time is, but we may come back to Lam Research. Let me write it down, LRCX. How you could take a big position without spending much money. Not a gimmick. Why buy that when I can buy Applied Materials, which is in the $60 range at the same price? We have now set an all-time closing, well, at least of current era closing high. A new fresh breakout here. When did you want to buy it? You wanted to buy it when it broke above the 50 in here. Didn't have a squeeze, but that would have been an interesting time. Great earnings per share growth compared to a multiple. Twice the multiple. Taiwan Semiconductors. This has a kahuna, a pocket pivot, mobo breakout from a squeeze, and looks to be breaking out as well. That one looks interesting. Form factor. So there's a lot of interesting semiconductor device stocks. All right. Specialty pharma. Don't know much about this one. I do some of the others in the group. Zosana Pharma. This had to be news, and it's, here's a stock. Let me try and make this so I can do what I want to do here. Had 24,000 shares traded on 223. On 226, it had 5.4 million. On this date here, it had 13.8 million. That's a story stock. They don't usually end well. Something is pumping this stock. Let's see what the news is. Now, they also could be great long-term winners too if it's fundamentally driving that volume. Look at the volume picking up. Long-term downtrend. So they got a new patent for migraines. This is usually not a pattern I buy. It's a pattern I short. Zoetis, I think this is veterinary health company. Great earnings per share growth, about 1-to-1 with the multiple, small dividend yield, lower left, upper right. I put this on a list, and I buy it when it does this, when it pulls back to the 50 and breaks out. Nectar, don't even talk to me. I actually went short this stock in May because it just didn't make sense to me. I covered my short and lost money right away. This is all hype. Here's a stock that's getting a market value now of $17 billion. Has never brought a product to market. People thought they were going to be a takeover candidate, and they licensed their big product. It's all about the immuno-oncology craze. It probably is a great short because it's too expensive. It should be forward at $6 billion, in my humble opinion. But Nectar, you don't get in front of a freight train that's going 80 miles an hour, which is why I lost money when I shorted it before. Jazz, sideways performer, mobile breakup from a squeeze, pocket pivot, and kahuna. It's got great earnings per share growth, 4 times the multiple. This is a stock that I think goes higher. This used to be a great trending stock and a stock that made me some money in the past. It's been sideways for a while. I don't know anything about Madrigal. Let me see how much this one is worth. Here's a $2 billion. So that's probably preclinical products. Don't know anything about them. But here's a pattern that I love. And then I'll tell you why I won't buy it. Bible gap up, run up, pull back to support. You had a kahuna, another kahuna, mobile breakout squeeze. That's a beautiful pattern. Why won't I buy this? Because it's only got 200,000 shares average volume. Too lightly traded. Here's a group where I might put my scaled one. nothing really different pops up. All right. So what I typically do is, and I can do this all in an hour, I go down the top 10 groups. You know, if you go back, when this stock was 12, I put a buy on this in one of our programs. Now, I don't think it was September. I think it was earlier, but it might have been September. And yeah, it was back here. Is that it? No, maybe it was September. Now I put it on back here. So here was a stock that was trading below the 50. I got excited because it had three out of 4 days it had kahunas. It had a pocket pivot. It broke out, retested the 50 twice, so it wasn't a great mover. And then all of a sudden it did this. A mobo breakout, squeeze, Bible gap up, and a kahuna. And the stock, without great earnings, still has not looked back. Here was another great opportunity to buy it. All right, kahuna, pocket pivot, break above the 50, mobo breakout from a squeeze. Scott buy signal 1. That's what I look for all day long. So it's not giving me that signal right now. But what I usually do is I start looking at the stocks in a group and I look for that signal. Here is a kahuna in a squeeze, recent mobo breakout and Bible gap up, doesn't make any money. Trades a lot. It's an IPO. I'd probably pass on it. Not enough history. Western Digital, you know, it's already broken out. I'm not chasing it. Seagate, kind of like Western Digital, already going. Already going. So I don't see anything here that's going to tickle my fancy. So I'm going to go back. Banks. So I remember I talked about banks being strong, regional banks. Last week we talked about KeyCorp. They all were up about 3% on the week. And let's see if they're still viable. And then remember, for the last 4 months, I've been telling you one ETF to buy besides LABD. US Bancorp, 2 sideways for me, pays 2.2%. I want to see something that's breaking out. Here we go. PNC, nice uptrend. Looks like it wants to break out here. Had a PSAR reversal, mobile breakout from a squeeze and a pocket pivot. Good earnings per share growth. I like PNC Bank. Citizens, looks like it wants to run. Regions, beautiful pattern. SunTrust, they all look the same. So what might I buy to reduce name risk? I might buy KRE. And let's take a look at KRE. Breaking out. So I like regional banks because rates are going higher. Deregulation, higher rates, good. Now, gaming stocks. Sometimes you get lucky. I had a big position in win options that expires on Friday coming. I had 145 and 175 calls. On this gap up, like an idiot, I chased the gap up. And I, somewhere back here, probably in this area, and I bought 175, 200, meaning I bought 175 calls and sold 200. So now I'm net long 145 and short 200 calls. And I'm feeling pretty good. Bought my boat right around here. And why do I know that? Because on the next day, I'm coming back on my boat down to Palm Beach from Stewart, and Steve Wynn gets in trouble for noodling somebody. And the stock just collapsed. Well, I knew my expiration date is the 3rd Friday in March. So it never, you know, I'm long at 145, but I bought some of those 175s back when they were worth $30. And when the stock dropped down here, I was in the hole on the trade. Well, shit happens. They fired Steve Wynn. They hired a new CEO. That stabilized the falls. And then they came out and said their first month of the new CEO is gangbusters, which was this day. And then they came out and said, oh, by the way, we paid off this guy who's been suing us to clean our books up, which is this guy. And Steve Wynn's net worth went up by leaving the company. Its earnings per share growth rate is great. Big position in McCaw. Lots of accumulation. We had a mobile breakout squeeze, a pocket pivot, and a kahuna. I look for Wynn to go higher, maybe a takeout by Las Vegas Sands, their friends, him and Abelson. MGM, not as powerful. Here's Sands. They all got about the same pattern. Now this looks beautiful. ERII, great earnings per share growth. A couple of pocket pivots. It's breaking out here. A little worrisome, the high jumps at the height. Would you like to have been buying it on a mobile breakout, a kahuna, and a break off the 50 back here in a PSAR reversal? That's the signal that I'm looking for every day, 24/7, 365. So we're getting long in the tooth on this one. So that's the top 7 internet-based services. And I will do this on the top 10 every night. When I'm not talking, I'm going faster. Too far, already broken out and running. I don't chase. Here's one that looks interesting. A kahuna, break above the 50 mobile breakout squeeze. That's my buy signal number 1. When I see zeros after big numbers, it tells me that we just don't have the data. 1 million shares, Chinese-based internet. Do your own research. It should be on my buy list. Auto Home, breaking out their Chinese internet. Shopify, my neighbor's stock. I didn't buy it because I didn't like the earnings per share trajectory. But, you know, if I played what I preached, I would have bought it back here in December. Oh, well. Missed that puppy. All right. E-commerce discretionary. You're welcome, you're welcome, you're welcome, you're welcome, you're welcome. It's funny, I remember when I gave this trade, I talked about it all the way here. I was buying here. I was buying here on the mobile breakout, pocket pivot, mobile break from a squeeze, pocket pivot, and kahuna. I commented it, I got into it early. During this week, I was pumping the stock saying seasonality is great. And many of you bought it. I did not see this run up to 324. I took my profits. A double of a stock at this price range in such a small period of time, unbelievable. Netflix, I'll be looking to get back in on weakness, but I wanted to book some gains. Probably too soon. Amazon, another big runner I'm in. We talk about this all the time. It's tough to buy these stocks, especially when they're that expensive. I'm going to show you how I get in on something like LRCX, which is expensive. Baba, give me a kahuna, some momentum. It's got the mobile breakout squeeze. It's getting ready. ITSI, I missed this breakout because I was too busy. Broke above descending trend lines. This was discussed as a good buy at my December meeting. Mobile breakout squeeze, Baba, gap up, pocket pivot, and kahuna. I said I wouldn't buy it until it broke out. It broke out the next day. He had another opportunity here. It's too far gone right now. So this group has been excellent. And then number 10, well, that was the 10. Now, just to show you where I'm talking about, diversified banks. They're not in the top list. They had a good week, though. But you better be long some of these. This is JP Morgan, mobile breakout from a squeeze and a kahuna. Expensive stock, 1.9% dividend, earnings per share growth greater than its PE. Rising rates, reducing regulation, these things go higher. Bank of America, similar pattern, mobile breakout from a squeeze, great earnings per share growth. Citigroup, this is one I wouldn't touch, which is Wells Fargo, but you might want to be in one of those first 3 or more of them. And even stocks that you might not be looking at, like Bank of Nova Scotia. You know, it's starting to move. Mobile breakout from a squeeze, crossing over the 200. I might set a buy a alert right above the 50, and if it takes that out, take a look at where it's at. This also, if I go to a weekly chart, big high close doji sitting on the 50 weekly moving average. A lot to like that chart. And then I also mentioned some of the insurance players. Property and casualty. You're welcome, you're welcome, you're welcome. For those of you that like me, bought into XL when I gave you the buy over here. I talked about it again over here. Who would have thought it got bought out at a 33% 2 days later? So this was another great buy. I didn't buy it because I had inside knowledge. I bought it because it broke out here with a mobo breakout and a kahuna, and I went and revisited it back here after this pullback, this flag, and the pocket pivot. But XL has done very well. Here's Hartford, mobo breakout squeeze, pocket pivot, and kahuna. So I think these will be interesting places as well. So usually this is where I start to think about stopping. I have a couple more things I want to do. I know this is a long one. I apologize for that. I'm going to go see the Yankees play, I think the Marlins, in a few minutes. One of the nice things about living in South Florida. I should put up my buy watch list just because it did well last week. There's no proof it's going to do well this week. Call out a couple of things. We've looked at most of these already, certainly the top group. I don't know what's going on with rails, but I saw a lot of interesting patterns. There's a breakout above the 50 with a high closed doji on the, this is on the daily, and then on the weekly on CSX, also a high closed doji. I thought that CSX looked interesting, as did some of the other rails. So I like Delta and Southwest. Banks, some consumer finance stocks look good. There were some explorers that I thought looked interesting. Mortgage finance, semiconductor devices. These are the groups, and there's your truckers that I liked. A lot of interesting stocks. Kind of all over the place, which is what happens when you have such a great week in the market. Let's show you see the bottoms, and show you what I'm going to do with these. Then we're going to go take a look at Lamb Research. What I do with this list. I throw it into my trade station where I have a number of different things in my radar screen. Now, when I go to the regular 4K resolution, it's all on one page. And I look for mobo breakouts from a squeeze, mobo breakdowns from a squeeze. I look at viable gap ups. I look at pocket pivots occurring during the day. I have a sense of when earnings are. And then I also have looking for new PPS buy and sell signals in high close and low close dojis. I sit with this up and I have alerts, noise that pops up when a signal hits, and then I go chasing if I'm sitting around my computer. Most of the time I run my charts at night. I do the same analysis I just did, and then I find something like LRCX. So here's how I would do. This is what I would do with LRCX. This is for educational purposes only, is not a commitment that I'm buying it or even thinking about buying it. The reason why I liked LRCX, should be pretty clear, is because it's breaking out. All right, so the stock closed at 224.95. Its high of the day was 226.08. Its low of the day was 213.94. It's about a 6% range. That's a pretty big range. Now, where would I put a stop? That's why I don't like this pattern. I would rather have bought it here, where the stop went to. So let's just arbitrarily go the lowest of the last 4 days. So that would put my stop at 199. Way too low. That's why it's not going to be on my buy list. So here's how I would trade this if I was going to trade it, and how I could take a position without a lot of money. I would do 2 trades. If I put LRCX, and I can do this easier on my phone, and I'm going to go into a synthetic spread. At the money is 225. So I could buy 10 calls and sell 10 puts at the same value for a nickel. So I could control 1,000 shares for $50. That's interesting. Let me hold this. All right, sorry about that. I'm back. So I'm looking at constructing a spread that's affordable with modest risk on LRCX. So 225. Now what happens if I was to put that order in? Why is it impacting my buying ability $50,000 when the whole trade's going to cost me $225? Excuse me, it's going to cost me $50 plus a commission. I'm controlling 1,000 shares of a $225 stock for $62 because my maximum loss here is $225,000. I could go to zero. So it's going to hold back out of my margin about a quarter of that. So it's reducing my buying power by $50,000. Now I can stomach that because I get to have all the gain without the loss. Let me show you what I mean by all the gain. This is what happens if I was to buy 100 calls, or buy 100 shares rather, of Coherent. Since we're going to buy 10 calls, we need to be buying 1,000 shares. So let's edit this. So to buy 1,000 shares is going to cost me $222,570 to buy 1,000 shares of Coherent. My maximum risk is the entire amount of money. My gain's infinite. I like the infinite gains. I don't like that much risk. I also don't like paying that much money out of pocket. Notice this risk curve. Stock goes up, I'm in the green. Stock goes down, I'm in the red. What if I could do this? Does that risk curve look the same? Absolutely. Is my maximum profit infinity? Absolutely. Is my out-of-pocket $222,000? No, my out-of-pocket to control, this is 1, so let's be fair. Let's take it up to 10. This is to control 1,000 shares of stock. My out-of-pocket's $2,850, not $228,000. My maximum risk is that I could 1,000 shares can go to zero. So I could lose the whole thing. We don't like that, do we? So could I come up with a pattern that reduces my risk, gives me infinite gain, and costs me a lot less money? So I do what I call my chicken shit synthetic, excuse the bad language. I'm going to add an option leg. I'm going to actually buy a put at 210. What did we say my stop was? We said my stop was 199. Let's buy the put at $205. What happens now? The most I can lose on this trade is $22,500. This compares to losing, if this went to zero and I had 1,000 shares, $220,000. All right, so I'm capping my risk and keeping my gains. So this would cost me to control 1,000 shares, $7,550. Now the downside of this trade is if the trade goes against me, then I'm at risk $15,000 times 1,000, another 15,000. Hence my maximum risk. But if I compare that, well, it's not going to let me. If I compare that with if I remove that, and this is only 10, all right, that's buying 10 shares, all right, 10 calls. So that should still be 1,000 times 220. It's calculating it wrong. I'm still risking $222,000 if it went down to zero. So I can actually run an analysis using my spread selector. And I could put in some of my favorite spreads. My starting strike price will be 225. And I can look at various spreads. And I can look over here and how do I get the maximum profits? Either I go long a call, where I only risk the price of the call. I go long a stock, where my risk is the price of the stock. I go short a put, where I get some money, but I have all the risk. I go synthetic long, which is the one I like, where I get all the upside, but I have the risk of it going to zero. But it cost me almost no money. So that's why I like to, at the end of the day, take a synthetic long and then start playing with various strike prices and then decide, how much risk do you want to take? Because I like the idea that to buy the same as the stock, it costs me almost no money. And I just have to figure out which put I'm going to buy. And if I bought, let's say, a 220, I'm only risking a little bit, it's going to cost me a lot more. And if I make this 10 calls instead of 1, it would cost me $8,000 to control 1,000 shares of I don't want Coherent, my bad, LRCX, which is the same price, basically LRCX, my bad. Let me start over. The argument is the same, even though I switched stocks on you. So to do a synthetic, let's make it 10. It would cost me $250 to 10 synthetic stocks, have the same risk curve. And if I add an option leg and I buy 220 puts, instead of costing me $250, it's going to cost me $9,250. But my maximum risk is only $14,250. And that would be if I lost $5,000 here plus my investment. If I was to buy the stock for $224 and buy 1,000 shares for $225,000 and have a stop at about $200, I'm risking $25,000. So here is a way to control 1,000 shares for $9,250 out of your pocket. The most you can lose is $14,250. You get all the gain. That's why I like chicken shit synthetics. Nobody else talks about them except for me, which makes me nervous, but I'll be talking about them at my live meeting. On that note, let's just go back to the live meeting slide so I can just review it. If you're interested in coming to this, you must let me know by Friday, end of day. If I do not have 5 commitments, I will cancel my share of the meeting. The George Lea meeting obviously is independent. It is $500. If you are at the George Lea meeting and you were at my meeting and paid me $500, you'll get a crisp $100 bill back from me as a thank you. If you are not at the George Lea meeting, it's $500, period. If we hit 10 paid attendees, then starting with number 11, it'll be $400, and I will give a crisp $100 bill back to everybody that is in the first 10. So if we get above 10, it'll be 400. If not, it's 500. I've got my contact. I've got Greg's contact. On that note, I'm going to go shower. Not that you need to hear that because I'm going to a baseball game. Goodbye, everybody. Hope you in the Northeast weather your next storm well. This is why I moved to Florida. Goodbye, everybody.